Keep an eye out on a couple of these stocks. Well, the mid-cap index is doing fairly well. It is outperforming the frontline indices, and the advanced decline ratio is also indicating more stocks in the green than red. Nigel, over the last two trading sessions, we've been seeing Jubilant Foodworks. Yeah. I think this calls for you ordering a pizza for us today in the lunchtime, because it's again at the low point of the day, not doing too well, despite the fundamentals for the company looking up, at least in terms of the IPL and Cricket World Cup coming.
Valuation, Mangala. Valuation wise, it's looking rather steep as well. How much of a multiple do you give it? You've been telling us 50, 60, 70 times. How much do you give it? I think the street is coming to terms with that. How does that sound?
Yeah, it sounds very good. But pizzas are good, but they are expensive.
Absolutely.
In any case, you're buying us pizzas for lunch. But I don't know about the lunch. Post markets, definitely around tea time, you will have earnings season kicking off, as IT majors both Infosys and TCS report their results later today. Rima joins in with the key expectations on both of them. Rima, take it away.
We are expecting a steady quarter from both TCS as well as Infosys. Strong deal wins announced by both the companies should offset the typical seasonality. So TCS and Infosys, both of them are expected to report a dollar revenue growth of 2.2% quarter on quarter. But Infosys' constant currency growth should be superior to that of TCS in this quarter. So for Infi, we are working with about 1.9% in constant currency revenue growth, while for TCS, that number should be at 1.6%. Margins for both the companies should be under pressure on account of the INR appreciation as well as supply side challenges, but the decline in margins for Infi should be more than that of TCS, because Infi will also have an impact of wage hike taken to counter their high attrition. TCS margins estimated at 25.4%, while for Infosys it should be at 22.2%. The key to track for Infosys will be their FY20 guidance. Consensus puts their FY19 constant currency revenue growth at 8 to 10%. Remember, their FY19 guidance was revised higher to 8.5 to 9% in the prior quarter. On margins, the company could announce a cut. So Infi margins could be lowered by 100 basis points for FY20 to 21 to 23%. And the historical trend will tell you Infi margins have been under pressure. Two other factors to look at for Infi. One, the deal wins have been strong. They've doubled in the last 9 months. And secondly, attrition has been very high for the company despite the measures taken. For TCS, as promised, the company is likely to end this year with a double-digit growth. According to our estimates, it should be a near 11% constant currency growth. The question is whether the double-digit growth continues in FY20 as well. Also, what happens to their stated EBIT margin band of 26 to 28%? Because for FY19, TCS margins are seen at 25.6%, which means lower than the lower end of their band, despite an 8.5% INR depreciation. Commentary on BFSI will be tracked closely because the indications through the quarter are that growth has decelerated. Now, both the companies have done phenomenally well in the last 1 year, a rally of 35 to 40%. Valuations for TCS stand at a premium to that of Infosys by nearly 15 to 20%.
Okay, all right, Rima, thanks so much for that. Well, we need to keep an eye out on the flashes that are coming in there. Our colleague Rituparna will join us to fill us in on that. Now, Supreme Court has said the political parties need to submit the electoral bond details by May 30th in a sealed cover. Now, that's the big news that's coming in there. And the final disposal of the matter will be done on an appropriate date. So that's something that, we were tracking. This is news that's just coming in from the Supreme Court. And all political parties will have to submit details of bonds received till May 15th as well. So broad details that are coming in there, Mangalam.
This is an important news, Nigel, because, the big uncertainty was that who are the end investors in these bonds, or where is the origin of this money lying? So electoral bonds by themselves was not an issue. The origin of the money was a bit of an issue. So now the Supreme Court has asked the political parties to submit details of bonds received till May 15th in a sealed envelope. We'll definitely keep an eye out on how that story pans out, as the Supreme Court will reveal them or talk about these at an appropriate date. We'll try and get in Rituparna on this. Okay, we do have Rituparna on this. Ritu, take it away. What is the latest that you're hearing? All political parties have to submit details by May 15th.
Well, the headline actually is that there is no stay on the matter. That is the crux of this entire judgment. But if you look at what the honourable judges said, and the fine print is yet to be loaded in the Supreme Court. What they have said is that the donor details have to be submitted by political parties by 30th of May, and those details will then be kept in a sealed cover. the final pronouncement on this order will be done at a later date. So this is what we have heard till now, that fine print of this order will come later. But net-net, there is no stay on the electoral bond process, which was a petition that was filed. So after some time, we'll get to know a fine print of what exactly the Supreme Court has decreed on this matter.
Okay, all right. Thanks so much for joining in, Ritu, and filling us in on those details. Let's shift focus then to a CNBC-TV18 exclusive. Sources tell us the IRDA has sent a show-cause notice to Sahara India Life Insurance. Yash Jain has been on top of the insurance space on the whole. He joins in to fill us in with further details on this front. Yash?
Well, absolutely, Nigel. Essentially, the case relates to the life insurance arm of Sahara India, that is Sahara India Life Insurance. What we are given to understand, the latest part here is that the insurance regulator, IRDA, has sent a show-cause notice to Sahara India Life Insurance and Sahara India, which is the parent company, asking why should the promoters of Sahara India Life Insurance, that is Sahara India, should be considered fit and proper to run the insurance business. The company itself was under a lot of litigation when it comes to the insurance regulator. Insurance regulator had alleged various governance as well as financial risks at Sahara India Life Insurance. To be specific, they had alleged that the parent company, which is Sahara India, siphoned off funds to the tune of about 78 to 80 crore to the parent company from the life insurance arm. They had also questioned the functioning of the company, as it was functioning without a chairman back then for a period of 4 years. Hence, an administrator from the regulator was also appointed. And now, of course, after having a due diligence in its process, finally a show-cause notice has been sent to Sahara India Life Insurance as well as the parent company Sahara India, asking them on all these allegations of financial and governance risks as to why the promoter should be considered fit and proper to run the business. As far as the way forward on this particular show-cause notice is concerned, Sahara Life as well as Sahara India will have to reply to the show-cause notice within the next 21 days, that is 3 weeks. After that, once a reply has been sent from the companies, IRDA Chairman Subhash Chandra Kunthia will give Subrata Roy Sahara most likely a personal hearing in terms of what his intention is with respect to the reply which has been sent, and a final order whether the company can be run by Sahara India or it will have to be submitted. The company itself will have to be submitted to the insurance regulator. Will a final order on that will be passed by around May, and that's the thing that we are picking up. As far as the reply from Sahara India is concerned, we are yet to receive a proper official response from the company when it comes to this particular development.
Okay, all right, Yash, and we trust that whenever it comes, we'll have you with us to fill us in and update us on this breaking story.